Okay, these are called CAT tools or FAT tools. Forex assisted trading tools or computer assisted trading tools. Now we got to define some terms here. First off, we got to throw some vocabulary in. Vocabulary words are this. Black boxes are fully automatic. They're full auto. You do nothing. They size. They do everything for you. Basically, they manage triggers, targets, entry. And trade management. And they manage sizing. They manage size. Okay, they do everything. You have something called a gray box. A gray box asks you if you want to take the trade. Do you want to take trade? You want to take trade. You want to take the trade. It finds it, it sizes it, and it sets everything up and just pops up a question box. Okay, but there's these things called CAT tools or FAT tools. These just assist you. They can be as simple as a fancy order, where it's getting you in or out at one price. But I have a plethora of these. Now, there's CAT tools are what I put my models in. There's a model called Black Bourbon. Okay, and Black Bourbon's a trend following one. All right. And it's a trend following not trend following, but it's a news, high HV, stop, and reverse model. Okay, then there's one called the Mule. This one's a variance trade. It's a variance trade, and it has if you're non-US citizen, it's got a component to it we call the love machine. This one does really well. And it's a variance trade also. The variance trades are what we've been doing, talking about. They're when two things get out of alignment. Now, I have another one. There's one called Little Johnny. This one is a grid system. It's a grid system, okay, and it trades on a grid. It's a grid system. And then there's another one called BN Siesta. And it is a derivative for non-Americans on Little Johnny. It's a grid system. Then we have one called Betty. It's trend following. And I use this one a lot in stocks, trend following. I use it with seasonality, trend following. We have another one called Red V. This is an intraday one, very much based on time of day. It's a concession of 4 trades, a breakout, followed by a fade, followed by a retracement, followed by a breakout, followed by a bank closing trade, a bank close trade. Now we have another one called Red T. That's a trend following. We have another one that's called this. It's called I'm trying to think of the name of it right now. Trace Rubius. This one is a triangular arbitrage one. And then let's see, and then there's a gray box one. It's called it's got several different names. There's a gray box system with 32 patterns. It has a whole bunch of different names. 32 patterns. And let's see, so that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's 2 other ones. There's 12 that are in there that I'm trying to think of them right. Oh, there's Rita. That's a scalper. Okay. It's a scalper. And then there's another one called, it uses line studies to get in and out. And it doesn't really have a name. I haven't ever named it. And this one just uses like trend lines and stuff like that. Now, those are the CAT tools. But the supporting tools to make those work are what's interesting. So we're going to limit these to indicators. Indicators run all the time. So we're just going to define 2 new terms. Indicators, they build all the time. And we have something called a script. A script runs once for time usually. It runs once. Okay, now the one that has the 32 patterns in it is kind of built around this. We'll start with a script one here. I'm going to pop both these on the new page, and I'm just going to switch the order because I'm going to start with a script. All right, so the script right here is really this. Here would be one of them. This is called a Dzone. Now before I do it, let me show you what the purpose of it is. How far does it move? How far does it move? How long does it take? How long does it take? Does it take? Okay. And which way first? Which way first? Okay. Now we have tools that answer this question. So if we bring this up, you come down in here and we look at this. I'm going to bring up this right here. This would be one of them. So let's grab this. This is unique to me, and it's called Dzone. It's a script. I have this in stocks too, but all the stocks charting software won't let me print into the future, so it just gives me, it's not as graphically intense as this one. Now, the inputs here do this. This is write the file to a data so we can confirm it, average it, show information true. This is a standard deviation box built to 1.5. Okay, 1.5 standard deviations. These little dots, we can show them up or not to. And do we want to sample by time, by pattern, by neither, or both? Well, let's first do neither because it'll give us a ton of data points. Now, this one's a little bit tricky, and I just had it. It didn't come up. Hold on. Okay, I was tired. It came up. Basically, what this thing does is it went back in time, and without getting into a lengthy conversation with you, the white dots are where resistance formed. So it went back in time and said, find this particular pattern that I'm looking at. It's a form of a stochastic that it's looking at right now. It says, find this. And there's some sneaky parts to it that I'd have to explain to you. But it says, this is the probability of it rising. There's a 61% probability of it rising out of this many data points. And this tells you whether resistance comes first or not. Now, this is the height of the move on average, and that's the direction it takes. So this is length and average movement, length of time it will take. And then this box is a 1.5 standard deviation box. It has all of them contained in there. Now, I'm going to do a couple things with this. I'm going to go to Object, and I'm going to delete this, and I'm going to take it off here, and I'm going to bring this up where this says Dzone. I'm going to bring it on, and what I'm going to do is, instead of sampling by it was taking every available data point, I'm going to sample by time of day, and I'm going to sample by also pattern. I will have very few data points, 14. Only at this exact time of day, out of all those thousands of data points, did it come up with this exact pattern. It's still on the same slope. And this yellow box is where we think resistance will form, and then this blue box is where we think support will form. Now, since this doesn't have very many data points on it, I'm going to bring in a couple other things and show you. I'm going to bring this on right here, and I'm going to turn on this thing that says, I guess I pulled it out, so I can't do it. It would show you the slope of all of the data points, every single one of them, but it just clouds the screen too much. Can't really tell. So I can come down here, and I'm going to turn back on this show also. I'm going to come back here, and I'm going to say, well, let's show it just by pattern. Okay, this is just using this exact pattern, how many data points came up. So what's this essentially used for is this box tells you probability. This box tells you probability. This box tells you how far it's going to move in that direction over how much time, which is very useful for options data. This also tells you the rise that is expected over time, and then the direction it'll follow. So for options data, this gives you the rise over time. Okay, so let me explain this to you. It's called a Dzone. It's called a dispersion zone. So it's called the Dzone. And it can take any event, it can take time by itself. Any event, walk back through the data, back through data, and see its relationship to support and resistance, relationship to R and S, Now there's some pretty proprietary stuff in there, how it's made up. It had to be done in a DLL, and the DLL, I'm into it, a lot of money and thousands of hours to get it to work right. But what it does is it basically can be used to, I'm getting ready to take it into its next phase of development, which is options. And the main problem with it is lack of data points. Okay, now, this lack of data points, I found a method to overcome the lack of data points. And it's pretty accurate, but I'll have to explain it to you. So that's the biggest problem we run into with stocks, especially if we get into patterns. Very few patterns. Okay, that can be a problem. All right, we can really bump into a big problem. Very few. I mean, the pattern won't show up a lot. So you almost have to take all the sectors and build relationship type databases off the DLL. Relationships being, they're in the same sector. What's the percent movement? And then you get a big percentage based off that pattern. And you can't get specific to that stock. So that's one Jeff tool. Now let's go down to indicators. There are two indicators called paydays and pay range. Okay. And what these two indicators do is they find average R and S in price and time. And then it can find average up and average down. Let me explain that to you. Okay, so if you bring this in and you want to look at something and you say, okay, how far is it moving between support and resistance? I guess we could classify this one as a Jeff tool too, where it shows where support and resistance is. I'm looking for this that says pivot. This is required in the DLL to make it work. So it calculates out the pivots, and then it takes the average run up. What's the average run up? What's the average run up in price and time? What's the average run up? Once it calculates the average run up, that gives us a volatility box. It's similar to this. This one's way more powerful, but we don't use it for that. We use it for this. Indicators should not be hard sampled. There's a couple limitations to the programs that we use, so we can't do this completely accurately in here. But if I take this and say this is set to 14, it's an RSI, and it tells us to buy if it goes above 70 or 30. Okay, well, yeah, it told us to sell there, right there. Okay, it said sell right here. Well, a lot of good that did. And then we get no signal for multiple days. That's hooey. Well, the RSI is out of sync with the volatility of the instrument. For example, see that volatility? There was buying and selling signals in there, but it's out of sync because of its time sampling limitations. It sampled time wrong. It didn't do it correctly. So what we do is there's an RSI in here, and I'm going to bring this up, and that one is a time sampled RSI that's not quite done. So what I'm going to do is I'm going to bring this up, and I'll show you a way it does it. That one's does a time. Well, no, maybe that one isn't a time sampling one. That's probably on my other PC. Let's bring this one up and see if it. Yeah, it's a time sampled one, because what happens? This is a limitation on the platforms that we use. It's a huge limitation. I might have to restart this even. Basically, what happens is if you need to build something and you want to go back through a data set. So I'm going to show you what this is doing. So one time it has to go through the data set and find an array and build all the resistance and support points. Well, we never stored this. Resistance, support. So it loops back through and finds all those. Great. Once it does that, now what it does is this thing goes through and says, once we find all the resistance support, now go back through the same data again and find the pattern we want. Okay, now find the pattern. We call that an event, and maybe this is a pullback off of increasing momentum. We found the pattern. Now go forward and find where resistance and support is again. So I think we're in our second or third loop through the data. And then what we have to do is, if we say, well, part of this is to time slice it, now we have to go through the data a third or fourth time. And this can be done on every single tick. It's very inefficient. Now, the reason that that's inefficient is I don't have a degree in programming. And so what I did is I hired people and paid them to make this. And I knew what I wanted, but I couldn't articulate it correctly. And most of the programmers didn't understand when you say pattern sample or time sample, they couldn't grasp it. So that's one I was working on for time sampling, a time sampled RSI. I can do it with this technique though. What I'm going to do is I'm going to grab the same RSI, but this one isn't doing that. And I just noticed it was in here. So this one will turn on. I'm looking for where it says RSI. This is averaging both the increase and the downside. Really, I'd prefer to average it up like I drew on the picture up there. Let me explain to you what that means. It's 30 and 70. Add 70, and let me bring this up. Okay, so if I add this, basically what we are saying is this averages up and down, when really it should average up the other way. But interesting, look at how many more signals I got, and look at how they're picking this off. For day trading, this kicks booty. Right there, boom. Right there, boom. Right there, boom. Right there, boom. I can show you how to do it by hand. Count the number of bars between support and resistance, average them out, and put it in the indicator. The problem is, now we run into another computer limitation because of speed. The computer goes through the data once and builds this. Well, in reality, this should change all the way through here. In reality, like when we get into this choppy time, it should change because right at the first it didn't change. And so this is a very, very, very useful indicator. Okay, so what we did with it is we took the time slicing. So we call it a modified indicator. Okay, so they're called modified indicators. It can be done with any indicator. Modification of indicator. Now, here's where we're going to get into the limits of what I've done. You guys will get to the very limits of what I've done. I know that I should time sample indicators, time sample of indicators. But indicators were only meant for one pass through the data. One pass through data. Well, I'm teaching myself how to manage this data now with speed because I don't have a background with it. So what happens is when I do time-based indicators, it just kills the computer because every bar that it bumps into, it says, okay, here's the indicator buy. Now, once I find the indicator buy, or I find 7 a.m., okay, so I'm rocking through the data and I find 7 a.m. So here I start at the maximum records. And I'm dropping through the data to record 0. So I'm going from least current to most current bar. And at 7 a.m. I find a buy. I get a buy. Now, to create this indicator at 7 a.m., I have to go back 20 days within the maximum record. So it's got a double loop in it. And if you could do that on every tick, I can't stop the computers from reevaluating on every single tick. I'm working through ways to do that so that what I use now are called scripts. So my really heavy duty indicators, they pass through once and you rerun the script when you want. That's why we built these in scripts. They run once and it's for really massive intensive stuff. So we run those once, like that Dzone I run once. I can't run it in real time. It loops through the data too much. So my time sliced indicators, I use them in scripts. And I've been trying to place them in indicators for a month, but it just doesn't work. So they need to go through a script in that. So I know that, so let's recap. So we have a Dzone one. We have paydays and pay ranges that are unique to me. And these ones called modified indicators. All right. Now, I also went and made the computer label the patterns. I said, well, you know what, computer, as long as I'm going through this data, go through and analyze patterns, okay? So it'll go through and label a pattern. All right, it'll say, well, what pattern do we have on the chart? There's none there. And it will try to find it, all right? And so it does pattern-based scanning. All right, so that's one of the tools that are in there. And you could do that in real time and look at it, all right? Let's move this off. The most probably interesting to you guys are the Dzone plus this. If you get these two lined up, now watch this bad to the bone. These are really good trades, okay? They're really, really, really good. So you can do this with a scanner, and but I've got to figure out a way to get it into your systems to do it. And I've been doing it mostly on Forex because I only had to handle 19 pairs, but it's so intense in some of the stuff that it's doing. I have to bring in all the stocks and go through it and build them on the stocks, and I can't keep up with it on the stock data very well. So what I'm doing right here is I'm going to bring up this Dzone again, this Dzone master right here. And I'm going to drop this on it, and I'm going to say, well, use all the data for right now, but I don't want those dots on there because they're kind of annoying. And I'm going to say, just show me the system here. Now, what if I get a system that's saying, hey, this is going to go up, and this helps me on the target. I think it's going to travel up this far. Well, how far is that? In foreign currency terms, that's 20 ticks. That's a 14% ROI in 45 minutes. That's a 14% ROI on invested capital in 8 minutes, or no, 45 minutes. This is the amount of data that was sampled. That's the probability of going that way, but mix that probability with this, and it does well. What I learned is I can't mix too many things in there, or I don't get good event data, okay? And I've never shown this to anyone, how this works, some of it, to anyone except for my business partners. And the way that some of this works is it's kind of to overcome the data issues, like of not having enough data points. What we do is we take the close minus R1 divided by R1 minus S1. This equals the range. And we say, oh, we triggered. What is this value? What is this value? This value. And then what we do is say, well, okay, instead of our indicator triggered, what if we just say this now? We say R1 minus S1 times value that it triggered at, value it triggered at. It triggered. And then what we do is we add in S1 equals trigger price in a range, trigger price in range. Now I have lots of data points because every single bar would have a potential data entry point based on some of that. Now, whether that's correct or not, in mathematically to do it, it fixes the point of lack of data. Really what you end up trading is your trading range and not the indicators, because an indicator may not hit, but I could plug anything into this technology. So the way the DLL is designed, it's really designed to do this, okay? It goes from here to here, and it rocks back in time, and it says find the event. Well, define me an event. I'll find any event, and then I look where support came in and where resistance came in. I've got a picture here. There's a saying that we have, and it's called, it takes a long time to get to simple. It takes a long time to get to simple. Okay, so let me show it to you. All right. Now, I'm going to bring this up, and this stuff works really well because you can take this and take it to the next generation. And the next generation is how much should my option price decay and move in price over time. See, nobody has good data to plug into your option values. So theoretically, I can tell you, I think it'll be this price and this time by this specific setup. So this is where we get into some real meat stuff that I thought you guys would like. Let me try to find my long time to get to simple image. There's an image here, and I'll show it to you, and then I'll tell you the limitations of what can be done. All right, I have a whole bunch of other unique stuff I'm doing, but I don't have the energy tonight to go through all of it. So let's go find this. Long time to get to simple. I have a whole ton of these, a plethora of images. So we're going to go down to here. We're going to go down to here. And we're going to go down to here. And I'm going to explain to you the pieces of data that come out of this. Okay, I'm going to go into my documents, and I'm looking for SDRs. That's what these are called. And I'm looking for one that says a long time to get to simple. Okay, long call, little Johnny. It's in here. I wanted to find it right back here. See if we can find it. I can do it off a bull pullback if we just see one that says bull pullback. Complex options, clean, hedge, football, flowcharts, flowchart for trade, worksheets, how to start your day, Elliott Wave, EA project, gray box, hedges. Let's see how to start the day, long calls, notes, patterns, okay, options, shortcut to EA, spreads. I don't even see the one I want in there, and I had one I was showing you guys the other day. So I've got to be missing some. I'm just going to see what's listed in here real quick. All right. I'm just going to see which ones are in there. I had it up just the other day, and I was showing you guys. We cut and pasted out of one of them. This is the flow chart for bourbon. That's the flow chart for mule down there, and how those work. That's the flow chart to get those working, but that's not what I wanted. Let me just take one more or two more ganders here, and then we'll leave it and I'll draw it. Let's go to not options, not that. It's not under patterns. Let's try both. All right. It doesn't have it. Nope, that's a model for Little Johnny and the Love Machine. Well, no, for Mule and Love Machine. Those are models for that. I guess I don't have it on here anymore. We had that just the other day, and we looked at it. We went back in time, and we were peeking at it, so we're going to have to make it. It'll take just a second. Oh, you know what? We still have it. I just remembered where it is. It's a TIFF file, though. So I won't be able to bring it up under the TIFF, but we can look at it. So I'm going to grab this. It's actually in the documents right here. I'm going to go to File, and I'm going to go to Open. And there's one sitting right in here. We saved part of it, and we imported it into the 12 T's documents. So we'll grab the one that has Eric's notes in it, and we'll slide down to the bottom. And then we're going to change this, because this thing, it's called, it takes a long time to get to simple. So we're going to scroll down here, and we're going to pop to the very bottom. All right, and then I'm going to take you through each component of this. This is one of the more proprietary ones, and talk to you about it. All right, it should be right down here. Okay, come on, this. Okay, now I'm going to copy image, and we're going to go back over here, and we're going to put it back into this one. Okay, so, but on this image, there's something I don't know how I can draw in here. I hope I can't. Shoot, come on. I want to copy that. Copy image. All right, so let's paste this in here. Well, I thought it would paste. There it goes. Okay, so picture this. This is an event. We'll classify this as an event. And this is, okay, so let me explain the image to you. And then I can show you how some of this is in here and how some of it we didn't put in and how come. So it went back in time and it found this event. And the event was defined by trend, momentum, location. Now this event doesn't include a trigger. So the upward green line is if I put a trigger in. Now the data points that come back, and I can explain this in terms of an array, I guess, or arrays of data. It says how long did it take? So as soon as we identified the trade, get a timestamp. So let's put this into our notes right here, up here. So the things that come out of this, so let's just talk about Dzone. there's two parts to it: trade identification, and there's another part for trigger. When did we find the trade? Okay, when did we find it? Timestamp when we find it. Timestamp, found trade. Okay, so we timestamp that. We said, oh, we found it. All right, first thing I need to do, I timestamp that. And then I need to know timestamp of support and resistance, and I need the value at entry, and or a value when we found it, not when at entry, when we found it, and value of R and S. Okay, well, if I have those items, so these are the most important items, I need a timestamp of when we found it, timestamp of support, timestamp of resistance. Okay, timestamp of resistance. Okay, we found it. Cool. Now the next thing we need the value of entry, R and S. Value of entry, or find time, value of R, and value of S. Now I can extrapolate all kinds of data out of that. Tons. Well, I do the same thing with the trigger, but when the trigger comes in, it creates a different timestamp. So in the image that you looked at down here, this line right there, and I don't draw it on my D-zones right now, because if I put a trigger in there, it puts it in, it says I can go from found to entry. So I have another data point up here. I can say, after I do this, I can say from where I found it, from trade ID to trigger, how long. Okay, now I can do that. So I can set that up. So from trade identification to trigger. All right, I can set that up and I can look at it. Now, I can tell you where it came in at and where it reversed at. Okay, and I can put that in, and so I have all that information, and it kicks out. So it's designed to answer these questions right here. How long does it take? It should be right up here. Okay, where did I put that? Okay, so how long does it move in one direction? How long does it take? How far does it move, and which way first? It'll tell you all that with probabilities within your dispersion zone. Now, because the event can be generalized, it can be anything. You can take any indicator. Now, if you take this as a structure and you start going through, and I could show you, I could drag on all the patterns, and I could say, well, look at this pattern, look at this pattern, look at this pattern, and look at this pattern. Does that pattern have this structure? Does it have this identification markings in it? And meaning, like, instead of what I explained to you about the stochastic, you would get a box, and that box would be built around a pattern. Well, just imagine some patterns, and I can tell you that some things do this. This will blow you away, I think, a little bit. I'm going to change the structure of the box on purpose right here. I'm going to bring it up, and I'm going to say, well, let's go back, and let's make the box a 0.5 standard deviation and no dots. And let's use all the data points that I can get my hands on. Okay, now, when this thing plugs in, see, what if the size of one box is smaller than the other box? Well, I can tell you a whole bunch. It shows you risk reward. And what if the time's different in that? So the length and time of the box is important. So if we talked about each component in here, there's one other component that we discussed that's not displayed. I don't have the trigger line on here, so this takes a long time to get to simple. There's actually two other lines that show up at the bottom that I didn't put in, and I'll tell you why. I can explain them to you in just a second. So this is generally how one of these screens would be laid out, and what happens right here is the red line is the length of the move, or the time of the move. So this is time. The first number right there, 6 bars of a 5-minute chart, 6 times 5, and 19 pips. 19 pips is a 20% ROI on average is what you'll achieve out of that. Now, if we were to take this, the width of this area this is time, and height is price in a standard deviation box. Okay, so there's our time and price. Well, that can be calculated into option models to give us when's a good time to sell. What I do is I look for what's called range up when I sell options. That means you're clear up by the red line. You're up towards the top, and you sell an option knowing that there's a high probability of reversing. Now, there are numbers up here as high as 90% probability of reversing over 1,000 data points. Usually when you get those, though, the distance to the reversal point is really imminent. It's really close. So this can be used in a plethora of different ways. Now, I was working on, and it never displayed right, something that I showed Robert tonight. It's really, I couldn't get it to display. It was how far did it move in accordance with time. And what I was doing is backing down time. So I have some proprietary breakout indicators that are unique to me that we haven't talked about. One of the things lacking in technical analysis is breakout indicators. There aren't any good ones. Really, there's not. It doesn't tell you. So I know from my work with this Dzone tool that breakouts are some of the best trades. They have the highest probability of going your way. Highest probability of going your way. No lie, going your way. Way off the charts compared to other things. But with those breakouts, when do you know they're good? Well, we know that time of day makes them good. Time of day. We know that, and we can sample that. That's how I get the product out of there and tells me. I know that also this isn't sampled. Speed a bar. And this is really P, which is price. How far was the price? How far did it move over a sub bar? What's a sub bar? A sub bar means less than the 5 minute. You're on a 5 minute time frame. How far did it move within that? That data is hard to get a hold of because no one gives you bid and ask data back for any extended period of time, and so you can't do some of the work that's needed. Now, this is one of the unique indicators that I have is a speed bar. Another unique indicator that I have, I showed you guys tonight. I laid it out in the Metastock. You may not have noticed it. It was in Metastock. I popped it up and I said take pivots of correlated instruments, and make those show up on a oscillator, and then measure time between them. This helps me with breakouts between them. I would love to do this on the whole stock market, but oh man, try to power through all that data. I can't even get it to make all the calculations. So what it looks like coming up, here's the limits of my tools. I need to offline store data once a night, and not recalculate it. Once a night and not recalculate it. And I just need to go into speed. And this is where I bumped into limits because I don't have a computer design background. But this is, I'm tired tonight, but I promised you guys I'd get this up for you. These are the names of models. This is one of the most powerful ones I thought you could look at that you'd like. There's a plethora of other ones. Plus I'm getting deja vu, and it's a 38 minutes. So just email me. I'm going to go have a beer and try to unwind tonight. But you guys I'll be up for 30 more minutes. Catch you later.